Today I'm pleased to present to you the results of the scoping study for our Diamba Sud gold project in eastern Senegal. We're really pleased with the outcomes, which confirm the high value nature of this asset and its clear future development potential. One of the biggest messages I have for shareholders is that we believe the significant scoping study outcomes are only going to improve over time. It's only been around 2 years since the discovery of high-grade mineralisation at Diamba Sud, and we're still at the beginning of the testing the geological potential of the entire project area. A drill program of up to 20,000 metres is currently underway, and the first priority being following up drilling at our Karakara or Area H discovery. This area was not included in the scoping study, so it represents an immediate upside opportunity. We will also be drilling at areas A, D resources, which underpins the scoping study, as well as targets in the area with potential for further discoveries. I'll now take you through the key aspects of the project and the outcomes of the scoping study. As a reminder, Diamba Sud is located in eastern Senegal and is within about 10 kilometres of Barrick's 12.5 million ounce Loulou gold mine and 5.5 million ounce Konkoto gold mine. With flat topography, limited competing land use, available water, excellent geology, Diamba Sud is ideally located to develop a gold mine. And Senegal is also a very mining friendly and safe jurisdiction within which to do business. In November last year, we released our maiden resource estimate at Diamba Sud. The total contained ounces were 781,000 ounces, with a number of attributes that will lead itself into a very positive outcome for our scoping study. 70% of those ounces are indicated. Most of the ounces are very shallow. 40% of the ounces are within the oxide component, and there's a very large high-grade component to the mineralisation of nearly 500,000 ounces at plus 3 grams per tonne. And importantly, it's open along strike and at depth and potentially at plunge. The scoping study was managed and compiled by CHESA with the support of a number of senior consultants with extensive African operating experience. The physical and cost outcomes reflect the technical simplicity of the project, which in turn drive the attractive economic outcomes. Mining will be completed by conventional open pit mining methods across 3 open pits, Area A, Area D and Area D South. We've outlined a 7.5-year project producing a total of 704,000 ounces at a very low all-in sustaining cost of $820 US an ounce. The first 2 years are particularly strong, with a total production of 244,000 ounces at an all-in sustaining cost of $545 an ounce US. The shallow nature of the mineralisation drives a low strip ratio, with a 1.9 strip ratio over the first 2 years and a 2.8 strip ratio over the life of mine. Gold production will come from an industry standard 2 million tonne per annum CIL plant, with an assumed recovery of 94%, although we've been achieving an average recovery of 96% from test work. The metallurgy is very simple, with rapid leach kinetics, low reagent usage, and no evidence of refractory or pre-gromming materials. The pre-production capital was estimated at US $159 million, which includes nearly 20% contingency or $23 million US dollars. The physicals drive strong financial outcomes, with a pre-tax IRR of 69% and pre-tax NPV of $402 million US. In Australian dollar terms, that is around 10 times our current market capitalisation as we release the scoping study. The post-tax numbers are equally as strong. All the results are based around a gold price of $1,800 an ounce, and it generates free cash flow post-tax of nearly $400 million over the 7.5-year mine life. Strong project cash flows will see upfront capital paid back within only 15 months of production, which makes this a highly attractive and financeable project. As I mentioned earlier, we have no doubt we can improve on these already compelling outcomes. Firstly, we believe there are opportunities to optimise the mine planning, scheduling, as well as the processing circuit but the biggest upside comes from geological potential across the project. We currently have a program of up to 20,000 metres of RC and diamond drilling underway at Diamba Sud, with the key target being the Area H or Karakara discovery we made late last year. Karakara is just over a kilometre southwest of Area D and has returned some very high-grade shallow results to date, and we have defined mineralisation over our 125 metre strike length, which importantly remains open in all directions. We aim to deliver a resource over Karakara this year and see this as a key driver to our resource growth. Our aim is to deliver a plus 1 million ounce mining inventory sometime this year and keep growing beyond that. We'll also be testing the depth and strike extensions at Area A and D, which could also deliver resource increases during the year. Probably the most exciting opportunities still lie outside the known deposits, like Area A northeast of Area A along strike to Barracks KB West prospect, south of Area A, Western Splay and Southern Arc, where there is known mineralisation but which has not been properly tested. Thank you for taking the time to let me run you through the Diamba Sud scoping study outcomes and upside which exist at the project area. The CHESA board has approved the immediate commencement of a definitive feasibility study at Diamba Sud, which will be undertaken in parallel with the major drilling program we have underway. The first assay results from the program are due in the June quarter, and we expect a steady stream of news flow to follow. We are really excited about the potential to create future value from the project and drive a re-rating of CHESA for our shareholders. I look forward to updating you again in the near future. Thank you.